Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. I hope I wasn't sitting there staring at the screen for too long. I was like pulling everything up. We got retail sales in a few minutes here, so let's try and go through this really quickly. Some interesting action overnight. On the S&P 500, there was some pretty strong support at 4,000 yesterday during the FOMC meeting, bounced off of that, but here in the overnight action, they have dipped below that level and are now extending down a little bit further, touching 39.80 at the moment. Treasuries, there was kind of a big downside and then they completely recovered it. But here on the open, a strong sell coming into the market from the treasuries. Oil, did okay yesterday. Let's say gold and silver getting hammered this morning. Copper too, although much more measured over there. Bitcoin seeing another sell here. Although I wouldn't say it's too huge of a deal until they're below 1700, right? And the dollar rising back up above 104, which they very, very much struggled to hold yesterday. So seeing a couple of points that had appeared to, show some support and resistance failing this morning. This is why you don't trade support and resistance, folks. And here we're going to get the retail sales. Core retail sales month over month. Expectation spot 1%, previous reading 1.3. And remember, we get, some information about like how the holiday shopping is going and everything from this. So this is a relatively significant number. We also get US Philly Fed Business Index, previous reading the estimate is -10, previous reading was -19.4. That manufacturing, they're looking for a reading of -1. And where is the initial jobless claims here? Oh, yes. Initial jobless claims estimate 232. That CC failure to pay fees? What are you talking about? It looks like the all of the fees and everything for CME are going up. Ow, that sucks. That sucks. We're definitely seeing consumers turn to credit.
Retail sales month over month.
This economy, aren't we? I think I need to shift that just to 10. There we go. That's a little bit better. Well, I think I'm gonna just watch this initial move here off this news, unless I see something that like really, really stands out to me as requiring action. So I'm feeling pretty tired this morning. Didn't get to bed at the best time. Been outside playing. That's been a little rough on my body. I think I need to rest a little bit. But I do think that now it could be a more advantageous time to trade. So let's see how this goes. The market's definitely making moves here this morning. Okay, so
minus 0.6%, minus 0.6%.
Core retail sales negative spot 2 versus the expected spot 1, and the headline retail sales negative spot 6 versus negative spot 2. So it's like we're going to see interest rates drop here a little bit.
Manufacturing at minus
initial jobless claims slightly less than expected at 211 versus 232. Wow. New York Fed manufacturing negative 11 versus an expected negative 1
4 million
and a previous of 4.5. I'm still waiting on the Philly Fed
index numbers.
But that was all.
Stocks and some downside movement.
So looks like the treasuries are gonna crawl back all of the losses that they've made since the open, at least. We'll see what the S&P 500 does. It seems to me that with each data release, the
US year-over-year figure, as well as the Philly Fed business index,
it becomes more and more clear that we're dipping into a recession. Yeah.
So the Philadelphia Fed Business Index for December up to minus 13.8, minus 13.8. That is lower than the forecast of minus 10.
I still haven't gotten the Philly Fed number yet. Look at them go. I don't know about that one. I could have sold, right? Only 20 ticks so far in the micros. It was a much better trade in the main line treasuries, right? I guess even when you look at the main treasuries, it wasn't that big of a move. What, 14, 16 ticks? Quarter of a point. Why did the music stop?
According to China's Vice Premier Liu He, it says, in face of real estate sector's downside risks, we are mulling new measures to support it.
This is supposed to have 7 hours of songs, but it feels like we get through it like every other day. What's with that? I have shuffle on, so it should be playing like all of them. Whatever.
We have posted out the US initial jobless claims report.
Morning, QJ.
Interested.
Been here every day this week, haven't you? I appreciate it. Oh my gosh, can we talk about this? I want to talk about something that has absolutely nothing to do with financial markets at all. Can you believe that Henry Cavill is no longer going to be Superman? What the heck is... Okay, so like James Gunn, the guy who did the Guardians of the Galaxy, he is in charge of DC now, and it kind of looks like they're going to possibly do a hard reboot. But not having Henry Cavill as Superman just is like, what? Online fans are super mad. I'm not going to say that I'm super mad, but I'm really surprised
retail sales report for November
by that decision. Randy says, I'm pissed about that. It really is. You know what I think is interesting about the DC universe? Let's say the personality of the individual characters in the DC universe is not their strength. Okay, Superman is kind of a... I mean, I'm not going to say that he has no personality. It's just it's not as interesting to me as it is in maybe some other
We are expecting the ECB press conference
properties, you know,
to begin.
We don't know. So what they're saying is that they're going to make a video about, quote, earlier in Superman's career. So I think it's going to be a Clark Kent just started in at the newspaper and whatnot. So they want somebody younger, I guess, is the gist of it. Which I'm still kind of like, well, if he's like just came out of high school, Henry Cavill could pull that off, couldn't he? Maybe not. I don't know. It seems weird to me. Anyways, what was I saying? Oh yeah, the personalities of the characters in the DC universe are not necessarily their strength, right? I think that the DC universe is much more interesting going into like the weird ideas that they have and the like the moral dilemmas and that sort of thing, right? Like, I think that your approach to the DC universe kind of has to be a little bit more like your approach to Star Trek. Like, yeah, it's a little bit campy and it's a little bit brainy sometimes, but like your approach should be, I'm just going to make the best Star Trek that that's totally Star Trek that I can, or I'm going to make the most DC thing that I possibly can and just embrace it because that's what people love about it. But when you put it onto the screen, you do need personalities to carry it. And something that they did really well with the DC cinematic universe was they picked really good actors that were able to give these characters personality where they didn't have them before. So they really turned their biggest weakness, in my opinion, into a strength. So it just seems so incredibly bizarre of a decision to me to not continue using Henry Cavill. Like, maybe you reboot the whole thing, but just don't, I don't know. Actually, you know how I would do it? Is I would just make a movie, a Justice League movie, whatever it is that you want, and not attempt to try and have any kind of continuity with the other shows, or try and explain what's been going on or anything. Just drop people into a new story. They're not gonna care. They don't care. Like, here's the thing, okay? If you go and you make a story, a new story about Lord of the Rings, right? Fans are going to be pissed. You can't do that to Lord of the Rings. Why? Because the whole thing about Lord of the Rings is that it is entirely consistent to like autistic levels, internally consistent history of a world over thousands of years, right? That's not the DC universe. The DC universe, they reboot that thing like every 2 years in the comics, right? So nobody's gonna care as long as you have the same like actors, and then you could like drop them into whatever kind of universe you want, right? And I think the other thing is that when you look at the movies that did well in the DC universe, it was kind of like, like the second Suicide Squad movie that did well, right? Almost all of the characters that they put in there were like new characters that nobody knows anything about. The main bad guy was a main bad guy that audiences aren't really very familiar with, but is definitely something in the comics. Like, it doesn't have to be a bunch of stuff that traditional audiences are familiar with. Like, DC has so much interesting stuff, interesting content to draw on, and it seems like audiences are totally okay with just something completely new that they don't know anything about, you know? Stop trying to water it down. No, they're not going to. I doubt that they do that. You know, I think look, I'm not opposed to representation, right? You know what pisses me off is the what is the word, patronizing,
5 minutes time now at 8.
right? So much of woke politics is really patronizing, and I find it really insulting, and I can't believe that any of the minorities that the left is supposedly trying to help is, you know, like, you can see it happen with the Latino community. They're like, this is so stupid. We don't want to use this Latinx term, right? Because they can tell that they're being patronized and they don't like it, right? Well, that doesn't mean that you can't do representation. So I've been watching the DC cartoons, like Young Justice apparently has like 4 or 5 seasons now. It's like there's a lot of content to watch from Young Justice that hardly anybody knows about, actually. And they definitely have like woke politics interjected throughout that show, but I do not find it nearly as grating as I have in many other properties. You know, I think that they did it incredibly tasteful, you know, and like having characters that like represent different minority groups that people can look up to, or at least enjoy watching, and feel like they're represented in the society. It does appear to me from the evidence to be like a beneficial thing. It's just when you do it like patronizing, like, well, there you go, like the way Netflix does it, right? You're doing more harm than good. I think the issue with Netflix is that they keep giving properties to people that don't really care about it, right?
Ad rising spot 6%, the day's high, as shares and dropping.
Like, here's the thing. James Gunn, he's in charge of the DC universe now, right? If this ends up being a dismal failure, James Gunn is going to feel bad about it. He's going to be upset that his vision of the universe didn't work out. I think that Zack Snyder is really unhappy with, you know, how things ended up going, and it wasn't all completely his fault, and it's just all kind of like incredibly disappointing, right? Okay. The people that made the Cowboy Bebop Netflix adaptation, which was just so absolutely terrible. Oh my gosh, it was so bad and insulting to the audience, frankly. The people that made that, they don't give a shit.
The drop here, so they're
like, oh, we thought we did a great, we thought it was great, we loved all of those ideas. You people are just dumb. They don't give a shit that they failed. They don't give a shit that the audience hated it, that the audience thought that it was like insulting to them. That they don't give that a second thought. You know why? Because they weren't really actually fans of it in the first place, right? They just wanted the property because the way that it works in Hollywood is you fill up, right? You just need to get your name on the project so that you can get asked to do other projects, and that's all that matters. There's another thing about this though. The other side of this, that, you know, aside from, you know, Henry Cavill not playing Superman, is that there is a J.J. Abrams Superman project in the works. What? That is apparently separate from this other property that they're gonna do. Yeah, we'll find out more in January. We'll see what it's gonna be. Wow, they're gonna continue through there. So I thought, oh, okay, 115 might be a spot. We did fall 5 basis points. Like, I totally could have traded that. In fact, what was it? I was complaining when we were at 4.8, 348. I was like, that's not enough, and it's gone another 20 ticks, huh? How far can this go? This is an interesting move. I mean, just the whole location, because we've been all over in this area a lot. So it's kind of hard to know, is this where they just like blow out the top? And I don't know. I think it would take a lot, but they are trending up pretty good. And how much of a change in cumulative delta has it been? 102 to 92, so about 10,000 contracts so far. And it is a steepener. It is coming in on the 5-year, so
Biden
that's
administration plans to add Chinese memory chip to make YMTC and
that's what we
21
should
major
expect.
Chinese players in the artificial intelligence chips to the entity list, according to the Commerce Department. The US Commerce Department also plans to remove 26 Chinese entities from the unverified list thanks to successful site visits, according to the Commerce
From the Hill, decades of New York Police Department evidence destroyed in Brooklyn fire. Didn't that happen like 2 days ago?
seeking to support China's.
That one was weird because I was like, oh, the conspiracy theorists are going to go crazy with that one. And then I haven't heard anything about it again yet, but I'm sure that eventually the conspiracy theorists will pick up on it. What evidence was there that they didn't want us to know? I guess we'll never know. So that on my chart, that looks like a significant pullback, but when I look at the DOM, I'm like, nah, they only came back 2 ticks. What are you talking about, Seth? So this is kind of this point where I'm like, I should go long, but I don't know if I can do it at a price. Oh, okay. So there's a stack there at 01. I don't like that at all, actually. Yeah, they traded through it. Is there an indicator should show the difference between series and NinjaTrader? No. That's why I have my spread indicator, right? So you can go onto Discord and you can download the free version of it, or there's a more fully featured version that is included in my NinjaTrader indicator package at speculatorseth.com for $100 for a lifetime license. And you can basically go in that and specify, here is series 1, here is series 2, and it's the calculation is this plus this or this minus this, or ratios, and then you could see the difference between 2 data series, and you could even potentially run it on like an indicator, though I've never tried doing that. Actually, would that work? I might actually need some changes to do it on an indicator. That would be interesting, because you can definitely do like indicators on indicators with the primary data series, but I don't know how you would do it against like a secondary data series.
Conference now getting underway. Again, the live video for this is on the feed.
Is it an oscillator? What do you mean by that? It'll give you like it's able to draw candles. If you do the full version, it can do candles. Keep in mind also that there is a built-in correlation indicator that can be useful for that sort of a thing too.
Also hearing from China's Vice Premier Liu, who says that he vows new measures to improve the property market.
Okay, new high there, but only by a tad. I'm still thinking about that big order that was at like what, 01. Seems like they're able to go across that very easily. I'm probably made too big of a deal of that order. It was only 1,000 lots.
The ECB's Lagarde currently reading through
that's
the ECB policy statement.
Easily within range of what can happen.
From it out on the financial juice feed. So again, ECB's Lagarde just currently repeating the monetary policy statement.
I guess we should be watching the ECB press conference, huh?
Please turn on the cameras and the microphone so we can hear and see them. And now I would like to hand over to President Lagarde, please.
There we go.
Thank you very much, and good afternoon to all of you. The Vice President and myself welcome you to our press conference. The Governing Council today decided to raise the 3 key ECB interest rates by...
I mean, the market could... We definitely got some important data, and the market's going to be trading on that data, but the ECB could be significant too, so...
In particular, we judge...
Let's turn the news squawk off here.
Still have to rise...
Apologize, I was probably talking over it earlier, wasn't I?
...pace to reach levels that are sufficiently restrictive to ensure a timely return of inflation to our 2% medium-term target. Keeping interest rates at restrictive levels will over time reduce inflation by dampening demand and will also guard against the risk of a persistent upward shift in inflation expectations. Our future policy rate decisions will continue to be data dependent and follow a meeting-by-meeting approach. The key ECB interest rates are our primary tool for setting the monetary policy stance. The Governing Council today also discussed principles.
That scarf makes her look like she feels cold.
Holdings.
I wouldn't go on with such
From the beginning
a
of March
scarf.
2023 onwards, the asset purchase program portfolio will decline at a measured and predictable pace.
It's a little bit further of a drop here in the treasuries.
Invest all of the principal payments from maturing securities. The decline will amount to 15 billion euros per month on average until the end of the second quarter of 2023, and its subsequent pace will be determined over time. At its February meeting, the Governing Council will announce the detailed parameters for reducing the APP holdings. The Governing Council will regularly reassess the pace of the APP portfolio reduction to ensure that it remains consistent with the overall monetary policy strategy and stance, to preserve market functioning, and to maintain firm control over short-term money market conditions. By the end of 2023, we will also review our operational framework for steering short-term interest rates, which will provide information regarding the end point of the balance sheet normalization process.
Is the equity markets not going to like the ECB here? I mean, they look like they're kind of continuing their selling.
Further, because inflation remains far too high and is projected to stay above our target for too long. According to Eurostat's flash estimate, inflation was 10% in November, slightly lower than the 10.6% recorded in October. The decline resulted mainly from lower energy price inflation. Food price inflation and underlying price pressures across the economy have strengthened and will persist for some time. Amid exceptional uncertainty, Eurosystem staff have significantly revised up their inflation projections. They now see average inflation reaching 8.4% in 2022, before decreasing to 6.3% in 2023, with inflation expected to decline markedly over the course of the year. Inflation is then projected to average 3.4% in 2024 and 2.3% in 2025. Inflation, excluding energy and food, is projected to be 3.9% on average in 2022, to rise to 4.2% in 2023, before falling to 2.8% in 2024 and 2.4% in 2025. The euro area economy may contract in the current quarter and the next quarter, owing to the energy crisis, high uncertainty, weakening global economic activity, and tighter financing conditions. According to the latest Eurosystem staff projections, a recession would be relatively short-lived and shallow.
Interesting. Oh, there was a strong pullback there, but they bounced right back up to the highs
next year, and has
very
been
quickly.
Down significantly compared with the previous projections.
The ZB breaking new highs and you're getting flattening coming in
growth
to the
is
curve.
projected to recover as the current headwinds fade. Overall, the Eurosystem staff projections now see the economy growing by 3.4% in 22, 0.5% in 23, 1.9% in 24, and 1.8% in 25. The decisions taken today are set out in a press release available on our website. I will now outline in more detail how we see the economy and inflation developing, and will then explain our assessment of financial and monetary conditions. Turning to the economic activity first. Economic growth in the euro area slowed to 0.3% in the third quarter of the year. High inflation and tighter financing conditions are dampening spending and production by reducing real household incomes and pushing up costs for firms. The world economy is also slowing in a context of continued geopolitical uncertainty, especially owing to Russia's unjustified war against Ukraine and its people, and tighter financing conditions worldwide. The past deterioration in the terms of trade, reflecting the faster rise in import prices than in export prices, continues to weigh on purchasing power in the euro area. On the positive side, employment increased by 0.3% in the third quarter, and unemployment hit a new historical low of 6.5% in October. Rising wages are set to restore some lost purchasing power, supporting consumption. As the economy weakens, however, job creation is likely to slow, and unemployment could rise over the coming quarters. Fiscal support measures to shield the economy from the impact of high energy prices should be temporary, targeted, and tailored to preserving incentives to consume less energy. Fiscal measures falling short of
something I didn't note was going around is that Bitcoin, despite the interest rates coming back down, Bitcoin took a big hit with the overall stock market.
Moreover, in line with the EU's
back
economic
to
governance
17.5.
framework, fiscal policies should be oriented towards making our economy more productive and gradually bringing down high public debt. Policies to enhance the euro area's supply capacity, especially in the energy sector, can help reduce price pressures in the medium term. To that end, governments should...
I always feel like the ECB press conference is more boring.
...structural reform plans under the Next Generation EU programme. The reform of the EU's economic governance framework should be concluded rapidly. On inflation now. Inflation declined to 10% in November, mainly on the back of lower energy price inflation, while services inflation also hedged down. Food price inflation rose further to 13.6%, however, as high input costs in food production were passed through to consumer prices. Price pressures remain strong across sectors, partly as a result of the impact of high energy costs throughout the economy.
Good morning, Octavius.
Inflation excluding energy and food was unchanged in November at 5%, and other measures of underlying inflation are also high. Fiscal measures to compensate households for high energy prices and inflation are set to dampen inflation over next year, but will raise it once they are withdrawn. Supply bottlenecks are gradually easing, although they
ECB means European Central Bank, yes.
Inflation, pushing up goods prices in particular. The same holds true for the lifting of pandemic-related restrictions. While weakening, the effect of pent-up demand is still driving up prices, especially in the service sector. The depreciation of the euro this year is also continuing to feed through to consumer prices. wage growth is strengthening, supported by robust labour markets and some catch-up in wages to compensate workers for high inflation. As these factors are set to remain in place, the Eurosystem staff projections see wages growing at rates well above historical averages and pushing up inflation throughout the projection period. Most measures of longer-term inflation expectations currently stand at around 2%, although further above-target revisions to some indicators warrant continued monitoring. What about risk assessment? Risks to the economic growth outlook are on the downside, especially in the near term. The war against Ukraine and its people remains a significant downside risk to the economy. Energy and food costs could also remain persistently higher than expected. There could be an additional drag on growth.
A couple of little clicks there and the treasury's pushing down again.
More sharply than we expect. The risks to the inflation outlook are primarily on the upside. In the near term, existing pipeline pressures could lead to stronger than expected rises in retail prices for energy and food. Over the medium term, though, risks stem primarily from domestic factors such as a persistent rise in inflation expectations above our target or higher than anticipated wage rises. By contrast, a decline in energy costs or a further weakening of demand would lower price pressures. Let's look at the financial and monetary conditions. As we tighten monetary policy, borrowing is becoming more expensive for firms and for households. Bank lending to firms remains robust as firms replace bonds with bank loans and use credit to finance the higher cost of production and investment.
I'm looking at the deltas. It looks like the buying in the 10-year has continued even though we've been stuck here at 01. About another 10,000 contracts have gone into this area, so it's probably the case that we've formed a liquidity hole at this location.
In line with our monetary policy strategy, twice a year, the Governing Council assesses in depth the interrelation between monetary policy and financial stability. The financial stability environment has deteriorated since our last review in June 2022, owing to a weaker economy and rising credit risks.
Yeah, I'm definitely bored.
In addition,
I'm definitely bored.
vulnerabilities have risen amid the weaker economic outlook and weaker fiscal positions. Tighter financing conditions would mitigate.
The ECB press conference is just so much more boring. I'm always really engaged with the Federal Reserve one.
Over the medium term, at the cost of a higher
No,
risk of systemic
I was not the
and greater
only time I had
downside
heard of the
risks.
Atlas trading Discord when that stuff went out, but I didn't know anybody from there.
Of non-bank financial institutions may amplify market volatility.
That one was notable because there had been prominent media stories about them like a year or so again, because they were basically taunting regulators, right? So I think that might have been part of why they got hit.
Remains the first line of defense in preserving
Maybe.
financial stability and addressing medium-term vulnerabilities.
Maybe we just need Mario Draghi.
So
I mean, the thing is that
raised
Christine Lagarde can be really entertaining, right?
by 50 basis points.
When we get to the questions, that's when sometimes we get some entertaining stuff from her, right?
Outlook, we expect to raise them further. In particular, we judge that interest rates will still have to rise significantly at a steady
The
pace
thing is like,
to reach
she's been
levels
going on,
of
like her
50%
initial comments
to ensure a timely
are
return of
really long, and I don't really feel like she's really telling us anything, you know?
keeping interest rates at restrictive levels will over time reduce inflation by dampening demand and will also guard against the risk of a persistent...
You shouldn't have mentioned Mario Draghi. It just got my brain thinking.
Moreover, from the beginning of March 23...
Because he did a pretty good job at this central banking, but he did a terrible job as president of Italy, didn't he?
And predictable pace, as the euro system will not reinvest all of the principal payments from maturing securities. Our future policy rate decisions will continue to be data dependent.
He was a banker, so well. I think the thing that people don't always realize is that these people are basically economists. Like being in the central bank is basically the top position an economist can get.
And we now
there's some problems with that, and you can kind of see it how when Mario went over to being the president of a country, he didn't do a good job at all.
Thank you very much, President.
Because he was just kind of like a shoe-in placeholder.
What do you mean, obviously?
That doesn't actually work. You need an actual leader.
One on the significantly higher rates.
Is he a banker? I don't think he was. I think he's more an economist than he is.
50 basis points hike in the future.
Let's look at his history.
You envisioned if you see significantly higher rates. And on QT, quantitative tightening, how do you decide which bonds or which one do you reinvest and which not? Is there also a metric behind? Thank you.
Let's see here.
So thank you for your two questions. On the first one, I'm glad that you picked up the key messages that are really embedded
He did work for Goldman.
Policy statement that I have just read for you. And one of the key messages, in addition to the hike that we decided today, is the indication that not only will we raise interest rate further, which is something that we had said before, but we also say that today we judged that interest rates will still have to rise significantly at a steady pace to reach levels that are sufficiently restrictive to ensure a timely return of inflation to our 2% medium term. I'm reading straight from the monetary policy statement.
Oh, that's kind of interesting. So he went from
the three key messages.
Being a professor and Minister of the Treasury, and then he went to Goldman Sachs, and then he turned around and he became governor of the Bank of Italy. So I would still say he's primarily an economist.
Now, what does that mean? You have to read it together with the steady pace. And
like I don't think you could say he's Jamie Dimon's contemporary in Italy or something like that, right?
On the basis of the data that we have at the moment, significant rise at a steady pace means that we should expect to raise interest rates at a 50 basis point pace for a period of time.
For a period of time? It is interesting that she's still acting like, oh yeah, we'll totally raise interest rates.
So
another 50 basis points. Okay.
And it has to be a steady pace, which means that we have made progress.
Seems to me like the market may be reacting to what she's saying here.
But we have
the euro is getting really strong on her comments, moving the dollar, and that's moving the other markets.
For a long game. On your second question, which is relating to the second part of our decision about the quantitative tightening or the reduction of the size of our balance sheet, where we decided the key principle.
The reason why I take particular issue with that thing about Mario Draghi is because I think that if Jamie Dimon was president of the Federal Reserve, that things would be different.
Clearly, the first principle is the starting point, which we have agreed would be early March 23. And we have also agreed on the monthly average calculated over a period of 4 months until the end of the first quarter. After that, as indicated in the monetary policy statement, we will reassess and we will determine what is the appropriate pace at which we continue this process. Why did we pick 15? It represents...
So, Frontier, I do have a video here on the channel where I go through all of the indicators. But the best thing is to read the documentation on the website. I have very, very thorough documentation on the website. So what I would do is just, select the indicator that you're interested in and then go and read the documentation.
In order to normalize our balance sheet. Bearing in mind that the key tool is the interest rate.
Do you have ideas on how I can do a better job at that? I'd love to hear it, because I do feel like that's one of the issues, is that you download this thing and it's got tons of indicators in it, and it's a little overwhelming at first.
So you said interest rates are going to have to rise for a period of time. Investors currently expect a terminal rate of about 3%. Does that sound reasonable to you? Is that in line with what the Governing Council had in mind with the statement? And then on quantitative tightening, I'm curious, what will determine the correct pace of APP in the future? Is it all about the inflation outlook, or is it more a question?
This guy on the left, just shave it off, bro. Just shave it off.
I'll start with your second question. These two components.
Pains me to see a fellow balding man pull it off so poorly.
Nature.
We need to help this brother.
The interest rate as the primary tool intended to fight inflation.
Dollar ES correlation hasn't been. Yeah, I think that's true to some extent.
The quantitative tightening is working, sort of not in the background, but is working to complement, to align with our key monetary policy tool.
Well, what about Andrew Tate?
No element of
what? I did not bring him up,
so to speak, associated with the reduction of the size.
You be careful invoking. Oh, because he's bald. That's what you're saying. You got to be careful invoking his name. It might throttle us. I don't know. I don't think he's kosher on YouTube, right? They banned his channel.
And incorporate the market expectations of our terminal rate. Do not certainly allow a return to the 2% inflation target that we have in a timely manner. So, more needs.
I don't make the rules. Come on.
Result,
yeah, they banned his channel.
Market
He got simultaneous. He got canceled, right?
Which will indicate.
You know how it works, right? Is all of the social media companies have this working group that they get together in, and they kind of share information, and it's primarily for them to share information about how to best moderate things, but sometimes they collectively decide to just cancel people. And Andrew Tate got canceled.
Margin calls and volatility, because this is not necessarily logical. And if the proposed mechanism is not efficient, what will be your solution for an energy price cap? And second question, how do you approach this unprecedented phase for the ECB, the quantitative tightening of the balance sheet? How do you predict investors' reaction?
Did he tell a Twitch streamer to shave his head? That's funny.
You ask a question about the...
there really are some advantages to just shaving it off, man.
And in accordance with the treaty provisions, which predicate that the ECB, when consulted, has to issue such opinion. So we did so, and we did so taking into account financial stability principles.
Was our favorite reporter wearing a coat? That was kind of weird.
Exact definition of the role of the ECB in respect of the gas.
Well, you don't have to go and pay for a haircut. You just shave it off. It's real easy. It's easy to maintain.
One of the considerations, the opinion that was issued.
You have more control over, if you're cold, just put on a hat. If you're hot, just cools off better.
And clearing system
kind of feels nice when it's velvety.
Is it TTF or TFF now?
I tell you, being bald is definitely better than having a comb over or something like that, right? I mean, right now I've got some hair on the side. That's just because I'm lazy.
That can be used. The risk is, in our view, based on
I
financial.
hate looking older than I am.
That there could be
When you shave it,
transactions that would
when you
to much darker corners,
shave the head,
information
it
available.
makes you look younger, at least younger compared to like when you get the horseshoe thing going on, right?
Separately from that, we have also opined on the fact that the ECB
Like that guy looked to me like he was in his early 20s and he had the haircut of a 60-year-old. Come on.
an active role in that process, because it is part of the ECB to be an independent institution and not to participate in such a mechanism, which leads me to tell you that I don't.
Ladies like balds. There are some women that like balds. It's a weird thing.
How do we address the this QT program that?
But I think it's definitely better than fighting the losing battle of hair loss, you know?
We believe that it is totally legitimate, appropriate, and actually efficient to go in the direction of reducing the size of our balance sheet, to do that in measured and predictable ways.
Core retail sales being negative means a weaker economy, and therefore we should see lower interest rates and buying into treasuries.
Available, including composition, classes of assets, permutation between them eventually. The green.
I'm not entirely convinced at this moment that it was a huge buy, though.
Governing Council meeting in February.
We'll see what they do after the press conference ends.
WebEx, I'd like to ask Francesco Canepa of Reuters to ask his question. Francesco, please.
Good afternoon, everybody. So a question about the meeting. Did the Governing Council discuss a bigger...
Oh, you can't see it anymore. There was a really super pale girl in there.
Slower pace of QT than the one that...
I feel super pale right now. Been outside in the snow, but
what do you need
I'm not getting enough sun this winter.
Rate hikes. Give an example. Your colleague and fellow countryman, Villeroy de Gallo, said he needed...
Man, the S&P 500 just does not look so hot today, does it?
Across most maturities and anchored inflation expectations. Do you broadly agree with him?
Thank you for your two questions. On the first one, I'm very pleased to tell you that there was general consensus around the table about the assessment of the current economic situation and general agreement about the orientation that we have and the strategy, which is to decisively, with determination and perseverance, to return inflation to 2% and to use all the tools that are most appropriate to that end. Not everybody agreed on the actual tactics. And I think that there was a very broad majority to support the view that we should show perseverance, move at a steady pace, stay the course to cover the ground that we have to cover. So you will be doing your digging and your asking and all the rest of it. But I can assure you that in terms of strategy, in terms of direction, in terms of orientation, there was total agreement on the part of the governing councils. Some might have wanted to do a bit more, some might have wanted to do a bit less, but eventually we coalesced with a very broad majority around the decision that you have in front of you. On the other question that you asked, I just want to take you back to the four messages, because I think that one of them...
You know, the sad thing about the hair thing is there are some women that are into it, but women by and large prefer hair.
In the monetary policy statement.
And I didn't take advantage of it enough when I had the hair.
Interest rates will still have to rise.
I peaked in high school and I didn't do anything in high school.
To reach levels that are sufficiently restrictive
But it's okay.
to ensure a timely return of inflation to our 2% medium-term target. And then, keeping interest rates at restrictive levels will, over time, etc. So this is the fourth message that we are releasing in that paragraph, which is that we will sustain the course.
A little bit further drop there in the Treasury.
We will sustain the course because we want those levels of inflation to remain. at those restrictive level for long enough so that
in the 30-year, you got a really clear head and shoulders sort of thing going on, but
Another question
from the chart pattern, but I really think what we got going here is liquidity hole around 30 with maybe a little bit of downside pressure.
Taking my question. I'm sorry for not appearing on video. I cannot find the right button to push. Yeah, my question is about the ESM, actually. It seems that the Italian government is poised to be the only Eurozone government which won't ratify, at least anytime soon, the reform of the ESM. And some in the government claimed recently that the ESM...
Yeah, I'm not just bored. I feel kind of sleepy.
Instrument. So would you like to comment on this, taking into consideration also that the ESM, of course, is a key to activation of OMT? Thank you very much.
Does Cameron die there during his...
Thank you very much for your question on the...
Apple to allow third-party app stores on iOS. What?
The German Constitutional Court has now been settled, and that Germany is now in a position to ratify, which, as you say...
The Treasury is the...
Who has not yet ratified.
The DOMs to the top right.
From the European Central Bank point of view, and bearing in mind that we have long advocated completion of banking union, obviously,
pretty much everything that you're seeing on this screen is treasuries, except for this little bit over here on the left. That's the ES.
The ESM to play its role. On the relation between the ESM and OMT, my understanding is that under its existing principles and under the existing governance of the ESM can be activated if and when necessary in relation to OMT. So it's not as if there was no governance in there.
I know brain cares to spare for what women like.
Can operate, including in relation to...
Isn't it weird that I think I know exactly what he was saying there? It's true. I don't necessarily care what other people want or like.
Please.
Hello, President Lagarde. Two questions for you. First one is, in your growth forecast...
There he is again.
Growth or return...
I mean, look, he's got a nice suit and everything. Just shave it off, bro.
Think that's
Save it off. Go to the gym too. You could probably use some muscle.
That's happened this year in terms of the energy crisis, etc.
I feel bad. He looks a little bit like me.
Bank losses.
I see a little bit too much of myself in that guy.
Warning that they will make significant losses this year and in the coming years ahead.
I didn't hear that. I'd have to go back. I think he said President Lagarde.
For Eurosystem national central banks to run with negative equity. And would that be a situation that is sustainable? Thank you.
Thank you very much for your two questions. On the GDP projections that we have, as you said, slightly updated 2022. We have downgraded 23 by 0.4%.
Speaking of Andrew Tate, he's back on Twitter and he said, "If they kill me, I love you all."
1.9 followed by 1.8%. So there is no upgrade or downgrade of those projections, and we believe that after this, a number of phenomena have faded. Growth will actually return. And let me
I really don't think that they would try and suicide him at this point, but
comes to mind, which has been impacting both GDP and inflation, is the
guy is a little narcissistic, isn't he?
Have prevented operations from functioning properly.
It's not like narcissistic disorder or anything like that, but more narcissism in his personality than the average person.
What happens to China and what role will China play in that context, which will be very interesting to monitor and to also assess as well. Another reason why we are
he speaks like me. No, well, you kind of speak like if Andrew Tate had autism, yeah.
Of the labor market. And the fact that we are currently at rock bottom unemployment rate for the euro area, and that given the shallow and short...
His voice is too squeaky?
We anticipate at the turn of this year, these employment numbers should remain.
I'm trying to think why you would say that. Squeaky.
Should continue to increase.
You seen the whole thing that like early on, like when he was like 18, he was on a reality TV show, and a girl like just straight up rejected him as you're going nowhere, and it was like being rejected like that like sparked something in him and kind of caused him to pursue the success that he's had.
Sources of energy, hopefully, and what impact the price of LNG will have on us, and what kind of substitutability.
It's a low blow. I felt like it was an.
We will benefit from.
I thought that you'd be like, yeah, that is kind of.
Russian.
Maybe it hit too close to home. I guess maybe it was too accurate.
Fossil fuel was to continue, but all in all.
Oh, I'm sorry, bro.
We believe that this 1.9 followed by 1.8, which is roughly the growth rate that we had previously for the euro area, has chances to.
Andrew Tate ripping people off
would come after the short and.
I haven't taken his product, so I can't speak to the quality of the product, but
now you also
it sure does seem to me like he's a hustler more than anything.
And so,
I know I have autism, but that's what people say about me.
Well,
but that's the thing is, to me, I can't square up
because some of them
the autism with some of the other things that I see you do.
The state represented.
I'm really trying hard to understand why, what drives autism, why it's like that.
Each and every of those national central banks is going to have to look at its balance sheet.
You've seen a few reviews and they were bad?
And is going to have to operate on the basis.
I tell you, what I've seen from like the trading is that the trading is probably useless, right?
About, the National Bank of Belgium, or whether you talk about Banca d'Italia, or whether you talk about the European Central Bank. So I don't have a sort of general framework that would apply to all of them, because they're all different in essence. But I think when you look at the at history and what has happened.
Okay, so it may be the case that my son ends up being like Rain Man level autism, and I can't figure it out.
Equity as well. So clearly, each and every national central bank will have to.
When they finish here in a second, we should try going a little bit deeper into it, because I don't completely understand autism.
That's what will happen. My understanding is that at the moment, many of them have.
And so I'm looking at other people that I know, like NASDAQ Killer, or like celebrities that have it, like Michael Burry, to try and understand, what are some of the driving things about it? Because I feel like I understand ADHD really, really well. But
they have historically generated quite a bit.
There are a lot of things that are
balancing act in a way, which is taking place.
Really perplexing to me about it.
Thank you, President. And the next question goes to Christian Siedenbiedel of Frankfurter Allgemeine Zeitung. Christian, please.
Yes, thank you. Do you think that inflation rate will already fall in December? And do you think it will be more difficult to go on hiking rates if inflation is falling in the future?
Well, thank you for your question. It may well be that the December number of HICP and possibly core inflation be a little bit lower. But we have good reasons to believe that...
I feel like there's been some decent downside, and then they float back up to 115.
To be higher. So we cannot be fixated on one single number. We have to look at a trend. We have to look at the inflation outlook. We have to consider what has been achieved, and certainly where we want to go. Because for the moment, what really matters, and I think that's embedded in that decision that we took today, is the destination. Where do we want to go? And as I said, we have more ground to cover. We have to go longer, and we are in this long game, which is the reason for the decision. And to just give you a little bit more substance, typically January, February are months where some of the pass-through, particularly energy prices, will reach the retail level. There are countries where the wholesale high prices have not yet traveled through the retail, and where people have not yet seen the high-level prices for energy in particular. So we are very mindful of that. The other component which we see also rising in the next few months is food. So food and energy will continue to unfortunately rise, which explains why we have this this revision of projection.
Thank you. Turning back to WebEx, I'd like to give the floor to Marta Izan of Negocios TV in Spain. Marta, please.
Are they going to end before the market closes? Or not? Or maybe not. Usually this would be like the last question.
Unfortunately, today we couldn't be there to weather conditions. I have two questions. The first one is about the impact of balance sheet reduction. Recently, Mr. De Guindos admitted that the ECB was unaware of the consequences of starting the to reduce
S&P 500 on the open, seeing some buying, also some buying in the treasuries.
About that possible impact. Could you help us to shed some more light on this? And in second place, we've seen how recently the ECB has increased its warnings about banks, saying that they are being very bullish on their outlook. But my question is, isn't the ECB also being overly optimistic in saying that the Eurozone recession will be or would be relatively short-lived and shallow? Thank you so much.
Do you want to take it? Yeah. Well, thank you for your question, but the Vice President is much more equipped than me to address your question.
Well, the question on the banks. We have always indicated that increasing interest rates is improving the short-term profitability of the European banks, but that we should not be blinded because of this improvement, this short-term improvement in profitability, and that we should take into consideration perhaps a broader picture of the situation. In what sense? First of all, that we are projecting that financing conditions are tightening, and this will have an impact on the funding of the European banks, and simultaneously that the slowdown of the economy simultaneously will have also an impact on the solvency of the clients of the banks. So that's the approach. It's a cautious approach. So there is an improvement in the return on equity of the European banks, but simultaneously we have to look a little bit further away, and in that respect we have to take into consideration the solvency.
When that guy talks, it's like, I know what I'm talking about. This is the way that it is.
On the funding of the European banks. And with respect to the question of the...
I think that Lagarde kind of is always talking like she's on the defensive and it works against her,
It's a new experience for us. It's a new tool for the ECB. And in that respect, that's why, as the President has indicated, we have to be predictable.
Okay, so after some initial buying, sellers coming in now.
Of QT. And that's what we have discussed in the Governing Council.
My S&P chart looks different from yours?
That we will start with a reduction of our balance sheet of 50 billion, starting in early March. And
mine's a 5-minute chart.
The impact that this measure is having on financing conditions, on the monetary situation, and the monetary policy stance.
Thank you, Vice President. And the next question goes to Nikkei, to the correspondent Takaru Minami. Takaru, please.
Good afternoon, President Lagarde. Thank you for taking my question. Yesterday, FRB decided to slow down the pace of hiking interest rate. What is the implication for ECB's monetary policies? Of course, I know monetary policy decisions are made by each central banks, but is it possible the ECB will continue to raise interest rate after FRB has finished raising rate? Thank you.
I think it's the Fed, right?
Yeah. Oh, okay.
The Fed, yeah.
Okay. Well, thank you for your question, because it helps me to clarify one thing. anybody who thinks that this is a pivot for the ECB is wrong. We're not pivoting. We're not wavering. We are showing determination and resilience in continuing a journey where we have, if you compare, comparisons are odious, but if you were to compare with the Fed, we have more ground to cover. We have longer to go. And that is the reason why we have very specifically added messages in our monetary policy statement.
Don't they know markets are already open? I guess they like they usually go for an hour, right? So I guess they decided that because they started at
which is why we said
6:45 that they're going to go for the full hour. I don't know.
At a steady pace. We have to reach levels that are sufficiently restrictive.
They're bluffing. It seems like nobody believes that the central bankers believe what they're saying, right? It's like that they all know that
and we have to remember
they're acting super hawkish until like the first quarter of next year when the economy falls into a recession, and then they'll change their tune, and they know that, and they just can't say that to the markets because it would change financial conditions.
So I know that it is tempting to assume that, oh, well, all central banks are doing the same thing at the same time. Not quite.
Nobody believes that they believe it.
It's not pivoting.
Thank you, President Lagarde. And the next question goes to Tonia Mastrobuoni of...
I think they're going to go for another 10 minutes, guys. Good grief.
Yes, hello, Mr. President.
I don't know if the U.S. equity market really cares that much, but...
Now that Mr. Bankman-Fried is behind bars, and we have the...
Oh yeah, let's talk about cryptocurrencies.
Cryptocurrency. Are you still worried? I mean, Mr. Panetta was very severe in the last days, but what is your opinion about cryptocurrencies? How should they be regulated? And are you still worried that the big tech like Facebook might one day announce its cryptocurrency? And my second question is about Italy, because the markets have become quite calm around Italy, and it didn't seem so this summer because it was a new government. And do you think that the TPI is already having effect on the markets, or it is a combination of TPI and the fact that maybe the new government is cautious on fiscal policy? What do you think?
On your first question, I entirely support the views expressed by Mr. Panetta, who has been actively engaged in framing the digital euro that we have worked on, and of which we will know the future in October 23. That's the time when we will actually decide whether we go for real. But I have long ago indicated that crypto assets, I wouldn't call them cryptocurrencies, but crypto assets need to be regulated on a global basis. I remember when I said that some 3 years ago, it made some people laugh. I still think to this day, I'm the only one, that there has to be a framework, a regulation, supervision, transparency of information, so that there is no misled consumers with tempting offers as a result of those crypto assets being around. I feel quite strongly about that, and I'm pleased that there are colleagues around the world that are now of the same view. And whether it's Terra, Luna, FTX, or others, we are clearly seeing that the lack of regulation, the lack of supervision, is exposing consumers around the world. I'm really pleased to see as well that MiCA at the European level is a breakthrough. I'm not sure that it's enough. I hope it's MiCA 1 and there will be a MiCA 2 to go further. But at least we are setting some standards which hopefully will inspire others around the world.
It's coming. What's it?
Such framework. In relation to TPI, as you know, this
seems to me like the only people that like cryptocurrency are the people that have been paid to like it.
Flexibility of reinvestment is intended to make sure that our monetary policy is transmitted smoothly across the entire euro area. And as far as we can tell, our monetary policy is currently well transmitted around the euro area. But it's obviously a tool that we have available, that we shall use if necessary. It's not intended to deal with country fundamentals, but it's intended to address the issue of transmission.
I think that too many people are influenced by social media and are in denial about how strongly they're being influenced.
I have one question similar to a question Jerome Powell got yesterday. Compared to the October meeting, some of the financial conditions have become looser, actually. Bond yields have gone down, for example. So does that not undermine your fight against inflation? What's your view on that?
I don't know. Like, coming in here today, and so far I've had a hard time being able to take a trade. So I might not do one today, and then it's going to be Friday. I might not take a trade until January.
This
It's kind of what it's looking like.
To decide from meeting to meeting. Thank you.
Well, thank you so much. Let me make that point clear. Forward guidance, we certainly take it as a principle in relation to QT. We're very explicit. We refer to 15 average per month over a period of 4 months, and then we'll reassess at the end of the second quarter. On the issue of interest rates, we will be looking at data. We will be data dependent, and we will review data, particularly when we have projection.
I mean, I guess I could have made $10 in here somewhere, but
we will reassess very carefully. But what we know today is, given the financing conditions, as you mentioned, given the expected terminal rate embedded in our projections, this is not enough.
And kind of part of my problem here is that, like, the trend is up, and I'm kind of having issues about how far up can the treasuries realistically go in this situation.
Continue that at a steady pace. So based on the information that we have available today, that predicates another 50 basis point rates at our next meeting, and possibly at the one after that, and possibly thereafter. But everything will also be determined by the review of data. So don't assume that it's a one-shot 50. It's more than that. I don't know how many more times. So it shouldn't be regarded as the new normal. But in the current circumstances, we believe that this is the right approach on a steady pace basis.
I need to gain some understanding on when is a good and bad time to trade the order book.
Thank you. And the last question today is for Jean-Philippe Lacour of AFP via Webex. Jean-Philippe, to you, please.
So part of it is, what is the volatility of the market, and is it appropriate for the amount of risk that you want to take on? But the bigger thing is it a situation where you can effectively predict the flows before you see them?
Room for avoiding a recession.
And there is this point where there's so much going on and so many different people that have to trade and reposition themselves in the market, both long and short, that it can be difficult to sort out and have a good trade, which is kind of where we're at right now. Where the moves happen so fast, you miss them. You know.
As I mentioned earlier on, in our staff projections, we anticipate at the turn of the year, meaning.
So on this one, it's like,
first quarter.
Are they going to push the treasuries even higher once the ECB is done speaking? Or is this just done and or going to retrace? And I don't think that I have anything that really strongly suggests to me what the flows will be.
Active and robust labor markets. We anticipate that the recovery will pick up, which is the reason why we have the 0.5% projection for growth in 2023. But we also believe, because it is our job, that we have to deliver on our mandate of price stability. And under the current circumstances, with the data we have, with the inflation projections that have been updated on the occasion of this meeting, we have to stay the course and rise significantly interest rates, which is what we are doing today, and do so at a steady pace because we have more ground to cover. And we will need to do that up until such time when our interest rates will deliver the 2% inflation target that we have.
Thank you very much, President Lagarde. This brings us to the end of our press conference. Thank you very much for following. Our next regularly scheduled press conference is on the 2nd of February. Up until then, we wish those who celebrate Christmas, Merry Christmas, and also a Happy New Year. Thank you, and see you next
Happy
time.
holidays to everybody.
Exactly, from you.
All right. Glad that is over. Okay. See if we get any kind of shifts in the market here now that they're done. I am seeing maybe a tad bit of buying in the treasury, so I think that it's been long enough that they could choose to take another leg up if they wanted to. So we'll see. So like the thing about autism is that, as I understand it, so like a lot of people compare ADHD to autism because there's like autism spectrum disorders and stuff, but I think that leads some people to think that autism is just another related issue in your neurotransmitters and stuff like that. But the reality, as I understand it, is that autism is caused by the brain just being structured differently for, you know, a variety of reasons. There's a variety of reasons why that could be. But some of the behaviors that you get in autism are just, you know, I don't understand what would cause that. You know, like my kid, if you tell him no, don't do so like last night he brought a tube of rash cream over to me, and he was like, I'm gonna squeeze it in front of you, and I'm like, no, you don't do that. And then he checked to see if any of it had come out, that he didn't get any of it on the bed, and then ran up. And it's just like he just doesn't understand at all. If you don't want him to do something or you don't like something, he doesn't understand that at all. At all. Why would any, you know, we don't understand enough about the brain to understand why you would not be able to understand what that other people don't want you to do something, you know? It's like the mirror neurons in your brain aren't working or something. I don't get it. And he has a very ADHD, so it could be the case that he's just ADHD and he'll start speaking later and then he'll be fine and he'll probably be a lot like me, maybe a little bit more ADHD. I don't know, man. It's awfully it's awfully anxiety inducing not really knowing where your kid is at or where he's going to be going. And having to consider the fact that it might be bad enough that you have to care for him for his entire life, you know? So I try and understand autism, but it seems to me like that because it has to do with the brain structures being different, each individual with autism is incredibly different, and so I can't approach it like I would like I do ADHD, where there's kind of like some general guidelines and stuff you can do. I have to understand him better instead, and that's awfully hard when he can't speak and it's just like random. It's just really weird. Yeah, Alligator's right. I think that because of all of the US data that we had, they started the press conference later than they normally do. So it went 15 minutes in the US Open, which kind of sucked. Okay, now that they're done, the S&P 500 is selling. Well, it's not just autism spectrum. It's like ADHD is considered to be an autism spectrum disorder. But ADHD is very, very, very different from your typical autism, you know? Like your typical autism, like one of the key features that I think qualifies it as autism is that the deficiencies make it difficult to either interact with other people or do daily tasks, right? Whereas ADHD is more issues with executive functioning. It's just like it's so radically different, two radically different things for them to be on the same spectrum, but at the same time there are some odd similarities with it all. I think part of it is that autism is very often accompanied by ADHD. So but like that's why it's like there's autism spectrum, because there's like some people have like Asperger's, for instance, that gives some obsessive interests, right? That's different from ADHD and stuff like that. But then there's also like autism, and like there are different levels of autism based on how capable the person is, right? So at this point, I feel pretty confident that my child has autism or ADHD. And the question is, to what degree of an impairment is it actually? Like, will he ever speak? I don't actually know. So he's coming on 3 and he doesn't talk. But I've heard stories about people that they didn't talk until they were like 4 or 5 and they were just fine. So that alone is not a good indication of how capable they'll be, right? Okay, we are getting a breach of the lower end of the range in the treasury, so see if it continues through. We might, I guess it wouldn't surprise me to see 3.5 again today. Your brother didn't start speaking until he was 5? And how well did things turn out for him? Was he able to go to college? Was he able to get married? Was he, you know? So here's another thing that I think about is one of the punching bags on the internet are incels, right? It's become this big insult and everything. And there's a lot of talk about, you know, incels. These are people that, you know, they're just down on themselves. And if they just tried harder and they did the right things, they could be attractive and then they wouldn't be incels anymore. But then I'm sitting and I'm looking at it and I'm like, okay, yeah, but there are some people that have like severe mental disorders that they can talk to people online, but they're never going to get married. They're never going to have a romantic partner ever, right? And is that my kid? And it doesn't seem to me like society is very sympathetic to a person in that circumstance right now. He's 11 years old now and he talks very well. Speaks better than me. But does he have behaviors that you can clearly tell he's neurodivergent? Or is he mask it pretty good? Like, that's the thing, is there's definitely people I've seen on social media and stuff, and it's like they're autists, they have autism, but they can mask it, and most people around them don't know that they have it. You need to get him to look at your eyes. Yeah, he does not want to look at you anymore. When he was a baby, he kind of would, and then all of a sudden he shifted. So this is another thing that I've read, is that like they might like develop normally up to a point, and then all of a sudden something changes. And I've even read that like, you know, a kid might gain a skill and then lose it. This is just like, you wouldn't be able to tell if you was to talk to him. It's so bizarre that like there can be such different outcomes, and there's no way to know what outcome you're gonna get. So I feel like that if he is gonna be in a situation where we care for him for the rest of our lives, that I need to prepare myself for that now. You know, and that maybe I would be doing a couple of things a little differently if I knew for sure that was the case. Like, I think if I knew for sure that I was going to have to care for him for the rest of his life, that I might try downsizing some things to save more. But I don't know. He understands the world through systems. He needs to solve the problem of understanding in order to get rewards. I don't know if you get me. I think I understand what you're saying. It's just there's no way for me to know if that actually applies to him or not, you know? So like one of the things is that people have different learning styles, and people with autism tend to, you know, only use one learning style. But I don't really know what learning style that is. He empathizing, sympathizing theory of Simon Baron Cohen, Cambridge University. So like, what are some things that I can say about him and his personality? So I can definitely get him to sit down and watch a TV show. Okay. And there are certain TV shows that he really, really likes. I mean, they have to be like little kid shows. One of the things that I think is weird is that like I can't just put on any old cartoon and he'll like it. It's like the ones that like Coco Melon and stuff that are really designed for like 2-year-olds. That's the only stuff that he'll watch. And the ones that he tends to prefer tend to be ones where the characters don't talk. There's this one called like Bear and the Lemmings or something like that, and so it's this bear, and then there's a pack of lemmings that are constantly annoying him. He likes that show. He never talks. They never talk on that show, rather. There's this other one, I forget the name of it, but it's this kind of this strange white creature thing that doesn't talk. It makes sounds, but it doesn't talk, right? I mean, I can get him to watch Word Party that has speaking, but it's not his favorite show, right? And then the other thing that happens a lot is he constantly wants to get into things and get into the food. So if you leave anything out that he can possibly use to get up on the counter, he will get on the counter. Yeah, the markets just took quite a significant dive there the last minute or so, didn't it? I think that there might be some options gamma kind of coming into play now that they were able to breach 4,000. Attention to parents is a required verbal ability in autism. Okay, sure. I cannot get him to just sit and look at my face. If I'm like really mad at him I can like pin him down, force him to look at my face. Look, this is bad. You can't do that. That's dangerous, etc., etc. It just doesn't. He doesn't want to look at you, and he doesn't react to it. He's almost 3. He was born in February, so he's like 2 3/4. 2.7, something like that. Ten divided by 12. 2.8. It is kind of like, because it's like, he's said words before. I've got him to say data. I've got him to say water, but it's like, it'll happen one time and it'll never happen again. And if you try and bribe him to speak or try and encourage him to speak, he kind of shuts down and is even less likely to talk. He'll make noises. He's constantly going, no, you know, but he doesn't. I'm not even sure if he understands what yes and no are. He says them all the time, but I'm not sure if he completely even understands what they are. Yeah, it thinks about your emotion as a mystery. I think it is. I think that my emotions are a mystery to him, even if I'm like really mad or like really concerned, like this is really dangerous. You can't do that. I believe he will break out of it. It'll take some time. Probably. I mean, my parents said that I didn't really speak until I was 3. So that's kind of the other thing, is that like, according to them, he's not different from me. But I'm not entirely sure. To get rewards, food, water, whatever he needs to solve the parent. Well, so he can... So he can, if he wants to get into something, he can definitely indicate to us that like he wants to get into the refrigerator, for instance, right? But I don't know how to set it up as a problem, you know? Or to make it like you have to say the right thing before I'll let you get into the fridge, right? Okay, how do you set it up as a problem that he needs to solve, though? Maybe I understand his emotions. I mean, the whole thing is that he doesn't communicate clearly. Right. He will go over to a place and start making autistic screeching. This is what he'll do. And most of that, and the frustrating thing about that one is that most of it is like ADHD, like he's bored sort of stuff. And getting into food is a good way to cure your boredom, you know? So he wants to get into the fridge. He doesn't actually know what he wants in the fridge. He'll just open it up and then he'll pull something out. And then whatever it is that he pulls out isn't even like something that he can really eat or do anything with, right? And then he quickly gets bored with that and drops it. Say he wants food, don't give it to him until he at least tries to understand your emotion. I think that if I did that he would just never get food. Like, I'm not sure if he even has the capability to understand it, you know? Okay, well, we're coming close to the open. Does look like treasuries are kind of on the hawkish side this morning. I'm not seeing super clear volume or direction in the 10-year or the 30-year, but I'm definitely seeing selling. In fact, some pretty excessive selling now at this point in the 5-year. I kind of feel like that I should already be in a trade here and that I missed it. But he at least needs to try. Okay. I'll try thinking about that and seeing what I can do with it, but he has not through the empathizing route, he knows through the systematizing routes. Maybe. Yeah, the thing is the thing that I think is weird is that for me, like this is something that's so weird about ADHD. This is one of the things that's kind of like counterintuitive and doesn't make sense, right? I can completely understand other people's emotions, for sure. And in fact, I can even come across sometimes, although probably not on stream and probably not lately, like when I'm on medication, but especially when I'm off medication, you'll come off as extremely empathetic, because one of the problems with ADHD and executive functioning disorders is you don't really have direct control over your emotions the way that other people might. And so, like, you know, if you get into a sad funk, it's a lot harder to get back out of it as an ADHD person. And so one of the things that will happen to an ADHD person is that when they're empathizing with somebody, they feel it much more acutely, right? So when I was the first half of my dating, when I was not on medication, girls would tell me freaking everything. Girls would tell me shit that they really shouldn't be sharing with you on a first date. And they really liked me because they sensed that I was extremely empathetic to them, right? But then the thing is that, like, yeah, you can get into that mode, but because you're ADHD, you're not catching everything that's going on. You're not absorbing everything that they're saying, etc. So in that sense, you can be not empathetic, not because you don't care or don't understand the way that they feel, but just because you missed the key pieces of information that would allow you to be able to react appropriately. Right? That's the weird thing with ADHD, right? There's kind of some things that are seemingly contradictory in ADHD that which is why so many people will say, like, oh, it's not a real disorder, or they'll trivialize the disorder, you know? It's because of those sorts of things. Or you get this thing where it's like an ADHD person can be incredibly competent, but then just not be paying attention and make a mistake. So then people think that they're an incompetent person. And then they're like, well, why is it that they seem so smart and then they do a really incredibly dumb thing, right? You just have to have somebody else around that pays really close attention, right? to kind of act as a backstop to them. And then so that the ADHD person can plow ahead with the things that they're good at, which is seeing the relationships between things that other people miss, right? Because that can have you know, in certain business situations and stuff, that can provide a big advantage. Let's see what's going on though. My name has been mentioned on Discord, I think. Where is it? I can't even see where. Oh, it's in the main chat room. I just have to scroll down. You like to speak about many different things, but then when the speed of information inflections increases, you doze out. So far, it's annoying. It's like once we lose your attention, it's over. We're not getting you back until next year. Yeah, it is. Well, I mean, the thing on the stream is that I usually just go with the flow, right? So if you guys are commenting and saying something, then I will continue to talk about that thing and respond to the questions as they come in, right? But if you guys aren't doing that, then I'll be like, maybe they're just not interested in this subject, so I'll start talking about something else and just kind of, you know, because the issue is that I don't get any feedback about what the audience actually is thinking or feeling about what I'm talking about, whether they're actually interested in that subject or not. The only thing that I get is when you guys talk, and I mean, I guess there is like the overall viewership of the stream, but I've found the viewership numbers to be pretty random. The only thing that's ever been consistent is like, if I'm not speaking about anything, then, you know, you might see a slow drop off in viewers as the people that are coming into the stream for their first time, you know, don't stick around as long. But other than that, so I can sometimes be all over the place because of that. Yeah. Okay, so here I think we're at the key point here now. Maybe a little bit higher in the 10-year, but is this gonna like reverse and go back up to the highs, or is this the point to try and go short? I'm kind of leaning towards maybe I should be trying to go short here at 27. Oh no, I like the questions. Like, that's the whole thing, is that if somebody wants us to ask a specific question of me, I want to go to those things first. I feel like I ask the same thing in different ways. Well, I tell you what, order flow is a really curious thing because it's not intuitive, right? It's not like, it doesn't match up with the way that your brain is set to understand the world. So once you've been doing it for years and you've built all of those connections and the understanding of those things, it kind of becomes second nature. But in the very beginning, there is a lot of, you'll learn something, you'll hear it, you totally understand it conceptually and everything, but then you don't really actually understand it. Like, your brain isn't actually making the connection. You might be able to say the words to me, but it doesn't result in correct action, you know, because you don't truly understand it on that level yet. Like, you have to be constantly watching the action every day and making those connections over a long period of time. You know, being younger and having a lot of neuroplasticity certainly helps, right? Yeah, that's... So what I'm seeing right now is like really, really heavy flattening across the curve. Like, the ZB is buying up really, really hard. The 5-year sold down really, really hard. So that makes me a little bit less confident over what the final direction is going to be here. Well, that might have just been the answer right there. If we're gonna get a strong sell flow, I think that it's gonna start coming in now as they make another push. So we'll see what they do. Order book has a huge scope of understanding into very granular nuances visually and brain. Yeah, it's just a complicated thing. But I thought QJ was gonna ask a question here, but he hasn't. Gonna watch some more of your series after the stream. That's a good idea. Hey, it is continuing down a little bit. This could be interesting. No. I'm definitely, the spread is working against a short trade here. The words are too ill-adapted. I don't know about that. I think that there is definitely language that makes sense. It's just that it's going to be a language that is foreign to you. I think another issue is that the best way to learn this stuff is by trading the treasuries, and the world of treasuries is I almost think intentionally alien to people, right? Like I do believe that there is a certain degree of gatekeeping in the fixed income world where they have a lot of words and concepts and so forth that are specifically to the fixed income world and are intentionally different from anything else to ensure that the people that are involved in it are people that actually understand things about fixed income. It's kind of gatekeeping. Ouch. So I decided to bail on a trade there, and now it's actually going my direction. Nah, I was being super tepid about that one because of the spread. But like you can see right there, the CB just came down 2 ticks and then it pushed up a little bit. I'd still only be up like 2 ticks, but still. But I guess you could say the action is being a little bit more difficult here than I would prefer. So it's maybe good to have gotten out of there. Wow, okay, there was a strong buy impulse that just came through on the S&P 500. Yeah, I don't know. I can just remember my early days and like watching the videos that Jigsaw had and so forth and thinking that I understood it, and I didn't. But I think a lot of that also was that the things that that retail trader education on order flow focuses on are, in my opinion, not the things that are the most important and help you the most. Like the piece of information that I think is most instrumental in both understanding order flow, but also understanding how order flow leads to certain market behaviors is to understand that the impact of new orders is extremely strong, right? Once you understand that, then a lot of the behaviors that you see in the market make a lot more sense. If somebody's going to come in and buy a ton of something, it moves it more than it logically should based on the piece of information and so on and so forth. Orders have more impact than they probably should from our ideal market, essentially, right? And that kind of changes things because you would typically think I should, markets are intended to follow the fundamentals, right? Markets are intended to follow the fundamentals, but they're supposed to, but they can't because the orders have such strong impact. And what that means is that you have to care more about what is actually going to drive the orders, and some of the things that drive the most orders end up being things that we trivialize and don't even want to think about, like how an index fund executes things and the strategy that they use, right? This is why retail traders have so much trouble, is because their entire framework is based on an idealized vision of the market, where current market prices are reflective of all information, right? So they're either trying to trade what they understand the fundamentals to be, or they're trying to look at a chart and try and extrapolate what the future is going to be from the past, right? And the reality is that the orders are what moves the markets, and what moves the orders has like almost zero connection to what happened in the past, right? And it has it has a tenuous connection to what is happening in the fundamentals, right? And some of the strongest things are things that unless you knew how the industry worked, would just appear random to you, right? That's the most important piece of information. That's why I'm always getting on that thing. That's why when people talk about like, oh, you're just retail traders, it's, it doesn't matter, it's trivial. I mean, I guess in practice, most of the time it is trivial, but if you really want to understand the market, you have to understand that it's not trivial. Like, all orders have impact, and orders have a stronger impact than people realize. No, how the industry works, which is to say, how does an index fund carry out its day-to-day operations, right? They come in and they look at how much money has been added to the fund, how much money has been taken out of the fund, and based on their current calculations, do they need to buy or sell more stock to keep themselves in line with the index? Has there been some stocks or parts of their portfolio that have done really, really well, and they need to take profits on and rebalance to other parts of their portfolio? And then once you know what those are, how do they actually go about going into the market and executing those things? That's what we're talking about here, right? When you understand those things, now you can come and you can look at the market and you can say, okay, this is the last day of the month, this is rebalancing, this is them because of the Federal Reserve meeting. The orders are doing this not because of the fundamentals, but because they are expecting or anticipating this, or whatever. Like, you can actually build a framework that actually allows you to understand what's going on and analyze it, right? Because you can come in and watch the market and learn things about the market and kind of get a feeling for like patterns that happen and where it's going to go next and all of that sort of a thing, right? It's just that you can't even do the analysis and make the connections when you don't have enough context to even understand what you're looking at, right? And most people never get to that point because they don't understand that it's the orders is what really matters, and you need to look at what are things that drive orders. It's not just the fundamentals, right? They're all thinking what are the things that actually materially affects the economy, right? But you notice that people on Reddit are really obsessed with the stock market is not the economy. You're going too fast. Okay, hold on. I'll slow down. Yeah. I was just giving an example. It's because they think that what matters the most is what is the actual state of the economy, and that's not what moves prices the most. Tore my brain apart. Well, I think you wanted to know more things about how an index fund is run, huh? My larger point was just what drives orders, right? So I don't like it when it does this. It may yet move some more, but it's kind of like in the place where I would have been looking to maybe take a quick profit. It's being difficult, and it's showing some signs of some, you know, having difficulty in the liquidity here around 24.5, I would say. Like, I think it's meaningful that we haven't been here for very long and you're already seeing a distribution around 24. I ran through a point like that. Well, I don't know if there's anything more to say about that particular part of the subject, though, right? But, you know, I find more often than not agreeing with what I read on Wall Street Bets. It's probably the case that you ignore or don't see this stuff on Wall Street Bets. That's nonsense. Although most of what's on Wall Street Bets is a different game from what we're doing anyways, right? They're more interested in talking about individual stocks, for instance. But then also a lot of the crazies just moved to other subreddits, right? To Super Stonk and the GameStop subreddits and stuff. Man, that, I tell you what. So I took a long at 4.73. I didn't like the price that I wanted. I wanted 4.7. It went a little bit and came back, and I decided to puke it because I could see what was going on in the spread. So it does look like I could have made at least $10 on it. But when you look at this, like what happened was the 5-year moved from like 13 down to 0.82, and I would have only have made $10 on it. That was kind of why I got out of the trade, was because I realized that there wasn't that much reward in it for me. That if I was going to make money from doing it, I would probably have to come over to the 5 or the 2 year. These guys are geniuses. I do think that when it comes to due diligence analysis of an individual company, the people on Wall Street Bets tend to do a really good job, or at least they're giving you relevant information. I'm not going to say that like it would be an edge using them solely as your analysis, but they're giving you relevant information. But the split side of that is that the issue on Wall Street Bets is that they're focused on all of the stocks that probably aren't the ones that you really want to be in the most, right? That's a fundamental issue with Reddit in general, is that it's primarily about what's popular. So you're going to read plenty of threads about what they think about Tesla or Apple, and you know, nobody's going to say anything about rare earth resources, which is what I'm interested in. This hasn't been going so well for them. It's kind of looks like, well, maybe they pull it out and maybe they don't. But right now there's some real concern that that company is just going to go kaput and get bought out by somebody else. Rare earth resources, but like to sort that out from the information available online is super hard to really understand what's going on at the company, right? And you'd need to be an insider. There's probably somebody that works there that's an insider that could be like, oh yeah, you really don't want to buy our stock right now, you know? Well, they're all about options, so the highest, most volatile, or stocks with the deepest markets are what they should be concerned about. That's probably is true. Which is to say, they're really good at finding the place where you can YOLO the best, right? Can we vote to reset trading for the day? Somebody in Discord asks. Okay, so that's a good question. We don't want you to tell us what you already know. We want to discuss to solve current problems. What if index funds change their execution strategy after you learned it? Well, so it's certainly possible that some of the things that we notice, so like in terms of like how I trade, the thing that's most likely to shift is I tend to look for 45-minute increments between moves. And if anything shifts over time as methods of execution develop, it's that, right? Now, the index fund issue is a particularly interesting one because there's kind of this whole question about has index funds made markets less efficient? It seems to me that they have. Would we be better off without index funds? I don't know. I guess that's beyond my pay grade. But it's certainly interesting to consider the consequences of index investing becoming such a crucial part of the market, right? And I don't think that we've seen the end of that story. I don't think that it's the case. You know, who was it? Larry Fink, the BlackRock guy, basically saying that there's some challenges ahead of us for markets that may necessitate a more active approach, is what he said, quote unquote. The manager for one of the biggest passive funds in the world is saying that we might need a more active approach. That's like a really big deal. That's a really big deal. That kind of makes me think that maybe some of these people that are saying that there's an inevitable index fund crash coming at some point, maybe they're right. You want to talk about it? That's the only other thing we can say about index funds, right? The problem before us this morning is, what are the flows going to be? We just had a bunch of data. That data suggests a weak economy, but central bankers are still very hawkish. So what are the future orders going to be? Well, the S&P 500 has sold off considerably since the CPI report, which doesn't surprise me. But is that all there is to it? Going forward, you've got this conflict between your typical end-of-year Santa Claus rally as funds rebalance and so forth versus tax loss selling. Tax loss selling. How is that going to play out for the rest of the month? That's the real puzzle in front of us, right? Jack Bogle himself said this a while back, that index funds and passive money has gotten out of hand and is distorting the market. Okay. Well, but so the question is, what is the situation that would really expose that and cause people to be like, maybe I don't want to be so invested in index funds. Because my opinion right now is that certainly, especially in your 401k, you want to be involved in an S&P 500 index fund, right? But a lot of people treat it as that's all you ever have to do. Just put it all in the index fund and you're fine. And I think that as you get older and you get to the point where you have to start contributing to your IRA, or maybe you get rich and you're managing, $2 million, I think that you need to be more diversified than that. Well, it was... Dude, okay, so how did we make that leap? Why did we make that leap? The whole point, the whole subject, or the original subject that we're still on, quite frankly, is that the key insight that you want to learn from order flow is that orders have strong impact. And here are all of the consequences of that. Here are all of the things that we can learn and understand about the market because of that, right? So because we understand that orders have such strong impact, now we can come in and we can talk about the impact of index funds. Index funds have become the strongest force in the market. And yeah, that distorts stock prices. It makes it more difficult for the market to come to an appropriate price based on all available information, because how much money got contributed to index funds that month ends up mattering more than the economy as for what stocks are going to do, right? That's how we get to that point, right? So then if we're talking about our trading, the question is, what do we know right now that might possibly predict future orders? Right? I actually made a pretty good call there, which was, it looks like the interest rates are rising here because they've been a little bit too dovish and the central banks are still quite hawkish. But because it's flattening, it doesn't pay so well here in the 10-year. Doesn't pay so well here in the 10-year. So because we understand what's driving the flows, I was able to make a smart decision about the trade that I wanted to make didn't actually have a favorable risk reward profile, and so I got out of it. And I might have been able to make the $10, but look, it's right back to where I started. So it was a good decision in the end. Right? And we're able to do all of that. Wouldn't be able to do all of that without the original understanding that markets have, or orders have, strong impact. See, it's the perfect subject for my ADHD mind, right? Where else can you take like such a seemingly insignificant piece of information and learn so much about an important subject from that one thing? How would you trade that info, in which direction? Well, so like, what are the main drivers of flow right now? It's going to be people saying central banks are still hawkish versus people saying the economy is weakening, right? So we're going to see in the treasuries, that's going to mean buying the treasuries and steepening versus selling the treasuries and flattening. And since we know that those are the two key drivers, is there good risk reward in going long the interest rate in the 10-year? Turns out, no, there's not, because of the flattening. If I wanted to make that trade, it probably makes a lot more sense to do it over in the 2-year. Maybe if I had taken that trade in the 2-year, I would have made more on it and wouldn't have given up on it. Yeah. Now from here, I am kind of looking at a period where the market might not move as much for a bit. I think that it probably could have another move left in it, and there could definitely be a shift in the flows after the London close. But probably until the stream closes, I don't think that they're going to do too much. I could be dead wrong about that. But. So if funds have more money for you, it's a sells yen. Well, so if index funds have more money, then it means buy the S&P 500, right? That's the real trade there. Now for the treasuries, you'd have to ask something more like, how did risk parity funds do this month? Right? When do they release this data? It's a good question. I don't know where it comes from. I am reading other analysts that are able to put out estimates of how much flows are going to come in. And then I'm going to take the other information that I know to combine that together and come up with an estimate for what I think the direction is, right? Usually release that info with about a week's delay, sometimes. I think that the bigger issue is that in order to have a reliable trade for a retail trader, there has to be a pretty significant imbalance baked in, right? December is like usually a really bad example too, because December is such a weird month at the end of the month, right? So that's why it's kind of like, maybe I don't have any trades. I thought today was kind of like the day. Didn't work out so far. I don't think I'm going to take another trade in the last 15 minutes. So I might not take a trade until January. Next time around though, the first, one of the mistakes I made last year was I thought I should ignore what the market is doing until after that first non-farms report. The market is definitely different after that first non-farms report, like the liquidity really comes back. But they made some significant moves at the beginning of the year last year, and I think that they're likely to make some significant moves in January this year as well. And I suspect that it is going to be lower interest rates, right? Probably am hard to follow. So this is where I come back to like the whole thing about what can we do to help the stream? Not have Seth host it. Like seriously, it would be like if I came in here and taught my wife all of this stuff and told her what to say, and then she ran this, like I could sit here and just trade, and she ran the stream and she was the one that was talking to you guys the most, the stream would be 100 times more popular. It really would. It really would. Most the things that are holding the stream in particular back the most is indeed Seth, and things that I'm not too sure Seth has a very good ability to be able to change, you know, because I can't predict when I'm gonna say something is gonna confuse you guys or throw you off on like, why are we on this seemingly different subject now? I can't do that. I'm not good at that. But here's my advice for you guys that are here every day is you just gotta roll with it, man. I gave you a piece of information I moved, and I connected that into a couple of other different pieces of information. And it might seem like we're moving between subjects really quickly, but that's because there are relationships from that, and there are things that you can learn from that. And as you guys are in here every day, I've definitely seen over the past year, when I first started on about this, when we first really started to hit this subject really hard, people didn't understand it, and now you guys do. And I think that you understand it on a much deeper level than most people in the industry do, because you're able to see all of the connections that I'm showing you. So you just got to roll with it, man. She would be talking about the most boring and dry thing. I don't think that she would talk about boring and dry things, but she would probably be more likely to talk about people, right? Or psychology. I don't know. It'd be interesting to see, I guess. We've never had her on the stream. Oh, actually, we have had her on the stream. She managed to trade for me a few times, hasn't she? We're kind of back to the spot where it's like, okay, if we want to go short treasuries, here's the pullback to do it. But I did not like this area below us. There was some liquidity holes. They were having a hard time down there. I think that it may yet be rates higher today, but the bulls probably are going to need to have an opportunity to try and extend this range first. Problem is the Fed sometimes can say or do the same thing and have two different yeah. No, you're totally right, NASDAQ killer. Like, when it comes to the FOMC meeting in particular, like there's like two levels of confusion on here, right? The first level of confusion that most beginners run into, that I think is you can kind of use heuristics to get around, but it's that orders are what moves the markets. So based on what people's expectations and positionings going into the event were to start with, and then compared to what they said and how what they said could influence future orders, then you get a certain kind of reaction. But then the extra layer of confusion on top of that is that when it comes to the Federal Reserve meeting in particular, there is a lot more speculative activity in the market than there normally would be. And there is a lot of people that are sitting there with their mouse waiting to make a big trade. For the sake of just making a big trade, not because they think that this is like the big deal that's going to drive markets for the next 6 months or anything like that, but just because it's a good opportunity. I should be able to make a few bucks here today, right? And so you can get a lot of perplexing and nonsensical order flows around Federal Reserve meeting, and it's probably making today difficult to trade as well, because you had the ECB speaking, right? What happens when people get the bluff and know the Fed is just insignificant? Well, you're saying two different things there, right? So there's the one side of it, which is the theory that the Federal Reserve doesn't really have any control over policy, and that's just false. It's kind of a conspiracy theory of sorts that you can never actually prove, right? But I can tell you just from being in the industry that what the interest rate is matters. Okay, it really does matter. It's a complicated system, so it's a little complicated to and it takes some time to see how that flows through, but when they change interest rates, it does matter. Okay, but The thing that's relevant in the current situation is the Fed bluffing? Because it seems I get a very, very strong sense from both what I see people say online and how the market moves in general against the central bank comments that the market feels that the Federal Reserve is bluffing. That the Federal Reserve is going to back off and start reducing interest rates in like April or May. And they know it, and they just can't say it because that would ease financial conditions. I think that's what everybody thinks. Nobody believes the central bankers believe what they just said this week. And a lot of the market action that I've seen today and yesterday seem to be the market saying, we don't believe you. Blasphemy. Then why do they fail to control inflation? Do you think no, they can't. So okay, so here's the thing. The Federal Reserve has influence on some things that have an impact on inflation, but they don't have control over everything that impacts inflation, right? Fiscal policy impacts inflation, geopolitical developments impact inflation, general supply issues impact inflation. They don't have any control over those things, right? All they can do is control their, but like that's the whole thing, is that the interest rate influences inflation, but the key thing about the interest rate is that it's the only one that we have complete control over. So we have to adjust our interest rates based on the market conditions, right? So why did we get the inflation? Well, two reasons really, right? One was that we did a bunch of things. I mean, we printed a lot of money and had really low interest rates, just, on the monetary side. But then we put a lot of fiscal stimulus in there that we probably, and like we went way beyond, like we put a ton in and then it was like, okay, we recovered. Let's put in more stimulus. Okay. And then we still had supply issues, geopolitical developments like Russia invading, all of these things combined for inflation, right? And then on top of all of that, the Federal Reserve said, we're not too concerned about this. We're worried that there could be another COVID wave and that would be really disastrous. So we're just going to hold off because of that. And that was their mistake. That was their mistake. So it's not that they're insignificant. This is just the Federal Reserve has to be very risk adverse, and that kind of leads them to always be one step behind. Right? Prices are free to do whatever they want. Well, like I said, they have an influence, right? When the Federal Reserve raises interest rates, the general effect that it has is that it tightens financial conditions. And even if the market wants to buy treasuries and have rates go lower, the Federal Reserve coming in yesterday and raising interest rates 50 basis points has an impact on the way that the banks have to do their business that overall leads to tighter financial conditions. It's not like the only thing that's involved, but it does have an influence, and quite a strong influence. You enjoy the subjects discussed? Yeah. Well, that means you're a real trader, QJ. The true test of is somebody a real trader or a good trader is to ask them what they think about Federal Reserve policy and how much nuance and understanding is in their answer is a really good indication of how good of a trader they actually are. And the people that are just vapid idiots that are going to wash out in a month won't know anything about it, right? they intentionally ignore that stuff. What do you think of the Federal Reserve policy? Well, I think they made a mistake, but I do think that the current policy is appropriate. But I also kind of agree with the market here that the Federal Reserve is probably going to have to back off in Q1 of 2023, lest there's like a really, really nasty depression sort of a thing, right? That's what I think of the current policy. And I understand how we got here. They did make a mistake. I don't know what you do to how you change the institution to avoid that mistake. But I understand why they did it. And, you know, at the time, do you guys remember way back then when I said, like, you know, this is probably going, you know, they probably have to do this, but it's probably going to result in inflation later, right? Why and how are you assessing the market is saying that the Fed has to back off in 2023? So when you look at like secured overnight financing rates, they kind of suggest that after another 75 basis points of increased rates, that the market starts to price in like rate decreases. Like if the Federal Reserve is raising interest rates in next summer, for instance, that's going to be really, really, really ugly for the markets. You don't want that. You don't think they're suggesting anything of the sort, frankly? There might be some other explanations for why the curve looks like that. There's negligible volume in June 2023. There might be some other reasons for that, but the supporting evidence that I would put up then, in addition to that, right, is that when you look at the economic projections and what the market, what the economic data has been telling us this month, I think really does suggest that the Federal Reserve is going to have to back off lest we have a really, really ugly recession. It's just, things have just been getting worse this month. If it's up, you like the Fed to death. Well, I tell you what, if the economy stabilizes here, you know, Federal Reserve raises interest rates another 75 basis points and then keeps it there. Market stabilizes here, and while growth is slow, you never get like a recession from an employment perspective. Then Jerome Powell truly is the greatest central banker of all time. But I'm not so sure that it works out that way. I think that in the first half of 2023 that the economy will look really nasty. It might not correspond with new lows in the equity markets. Okay, it may be the case that we've already hit the lows in the equity markets, but you're probably going to see some ugly economic numbers in January and February. Yeah. Do you remember when you blasted? Well, I've definitely blasted them. Jerome Powell is the greatest central banker of history. That's not even up for debate. Come on, it's totally up for debate. I do gotta go, but since you brought it up, something that I find really interesting is that we've had a slate of central bankers that like make really disastrous decisions and then come back from it and do really well, right? Like Ben Bernanke, that was totally like, everybody sings Ben Bernanke's praises, but the reality is that he did not see things going, and really his actions before the financial crisis were very instrumental in it playing out the way that it did and it being so bad. He totally screwed up with rates and the housing market and everything going into 2008. and then everybody liked him because he became Helicopter Ben, and he did the right thing there, but it was only because he made a mistake initially, right? So is Ben Bernanke the greatest central banker of all time? Well, like, you could make that argument, but it's like, doesn't the initial mistake kind of diminish them? And it's the same thing with Powell. It's like, well, if they pull off this soft landing, that's going to be, you know, then I can say maybe he's the greatest central banker of all time. But right now, it's kind of like that mistake last summer is kind of a big mistake, you know. I kind of think that Paul Volcker is probably a greater central banker than Jerome Powell at current point. He should be awarded all 5 of the Nobel Prizes and the economics Frankenstein monster prizes. No, I think that there are 2 guys. There are 2. If I'm going to say what's like my top 5, I'm gonna say Eccles, Volcker, and then maybe we could take some of the newer people. You know, I don't know. Like here's let's do this another day. I gotta get going. Well, I'd be interested to know how you guys would rank like Yellen and Greenspan, but we can do that tomorrow. All right. I will see you guys then. In the meantime, stay excellent.